Bitcoin bulls come back and flip our level of interest here at 73.7K as ES keeps pushing up and following our path that we laid out. Let's dive in and talk about it. So in last week's video, I was looking for a potential move down in back underneath the 76K level, which it did, and then a retracement up before looking for a short. That played out here. I did end up taking a short, and obviously I got stopped out from that. I still think that was a decent setup. The main trigger, the one that would have built a little more confidence, is if we would have broken this low here. One thing to keep in mind here is that we did bounce off of and flip our 73.7K level, which solidifies this level of interest as something to pay attention to. If price ever returns back to this level, I'll be keeping an eye on it and playing it no matter which way price interacts with it. But as you can see, we hit it pretty much to the tick here and reacted off that and bounced off of there. We ended up pushing into the 50 of the higher degree pull from up here, and we have a little CME gap as well as our next level of interest here at 80.7K. So I'm watching to see how this kind of prints out here. So far, the levels have been pretty reactive, and we've been flipping previous levels of resistance into support as we've been walking up here, which is pretty much the bare minimum that an uptrend needs to do. As I said in the last video, the bare minimum is we keep putting in higher highs and higher lows and just keep this uptrend going, even though it would be pretty ugly. The key here is we want to see how this resolves at the lesser degree to see if we get something that resembles an impulsive move that we can anchor off of. Right now, we don't have the best anchor within this move up here. We have some three-wave looking moves up, but then they end up continuing on. So is this some part of a sharp correction up, some kind of WXYZ up here, or is this some kind of flat patterns printing here as we're moving up? I don't think this move up has cleared up what is really going on. Hopefully this week we'll get some clarity of count, and we'll see if we get a completed move up to a higher high and then we retrace back down. That's really what we're looking for. So in Elliott Wave, what we're looking for here is a break of structure of one of these pivots to gauge where we are in the count. Hopefully something prints that displays what the market is really doing here. In the end, what we're looking for in this move is some kind of anchor to build off of. An impulsive move would be a nice anchor. Impulses can be the most bullish thing and the most bearish thing. Either this is going to be continuation after this impulse, we get an internal retracement, we keep this moving up, or the impulse is a completion of this whole pattern up here, and then we're just going to roll over, either retracing this larger degree or Dunsky. This level of interest here at 80, it's not the biggest resistance or level of interest by any means. All we really have to go for it here is this little wiki here. So we could get some kind of penetration and move up to this higher level. But for right now, 80.7K here is on watch just because of some of this other confluence in here. We have the 50, CME gap, and a level of interest all in this area. So pushing through here, obviously, and up to 87 would definitely throw us an anchor that we can build off of at the larger degree. And then obviously bears would look a little less in control. But with that being said, let's go ahead and dive into the counts. So looking at some of the counts on the bullish side, I want to start out with this count right here. This has been my main bull count for the last couple of weeks or months or whatever. Any of these counts are not ideal or textbook at the moment. We're still waiting for something to print that we can anchor off of at the larger degree. Each of them have their flaws, of course, and each of them have their strengths. But I'm just going to go through the possibilities, and hopefully we can pull out a probable count here. So my first count, again, has been the leading contracting diagonal. We have the falling volume, which is still falling, by the way, and adds to our confluence of some of our other counts that we'll deal with here. We have falling volume. We need volume to follow us and display that this move is genuine. That isn't really happening. We've been declining as we've been going up, which shows a little bit of divergence there. But in any case, again, I think this has the look to it. There are some questionable waves in here, don't get me wrong. But I think the main anchor for me, again, is this zigzag here. I think it's pretty blatant. So using that as an anchor for this count, Again, there's a couple of outcomes possibilities. If this is a motive wave here, and we're looking for a 1-2 or this to be some kind of a ABC, we're looking for a motive wave over here. That would be the ideal, quickest rip the band-aid off situation where we get two nice clear motive moves up and potentially some continuation. Ideally, if this is a motive move up and if this is some kind of subwave, actionary wave, that's going to help us continue up and continue going. I think 70K is going to be the spot. It's going to be the first kind of trigger to keep an eye on here for a level. We want to see a nice completion up in an ideal pattern, and then we get a nice clean retracement, something similar to this, back down to the 70K area. Again, that would be the ideal. We can go back and forth on what's really in here as far as motive wave. We could move some of these up and try and rationalize what's going on with this count. But I think this is the most conservative, is that we got a 1, 2, 1, 2, 3, 4, 5. And again, I know this is ugly, but we're coming to a completion. And typically when it comes to trading, I like to lean on the more conservative, not have my moon goggles on like many tend to do and then just get slammed. I think this would be the most bullish. If we're going to start with the most bullish, is that we have an contracting diagonal here, correction, and then we're starting the second leg. And either we're going to just blast off from here, or we're going to come back for a little correction before we get another blast off here in a 1, 2, 1, 2. The other count I'm looking at here that would make sense of this, if this isn't a motive wave, is that we're dealing with some kind of flat here. Right now we are coming into the 1382, which is the most likely target for the B wave of an expanding flat or a running flat. And we've already broken above the 1.05. So we're right in the range here of an expanding or running flat. And that would be kind of the backup. That's just another count that I'm looking at that would still have us hold above 60K. That's the backup I'm looking for here as far as the bullish count goes, with the diagonal being the primary actionary wave here. As far as time goes, that would add and give us some time here. Right now we're at the 1-to-1. So if we came back down again, we still have some time where this could be the primary actionary wave, reactionary wave, and then we're going to get something that offsets this. All right, and the other consideration here, again, going off of my handy dandy little Elliott Wave cheat sheets here that you can get for free on the Discord, we might be hitting some rules and some guidelines here for an expanding diagonal. The move that we're putting in here, if we do end up falling back down, again, holding 60K, which is the key here for all these bullish counts at this point, coming down correctively, sweeping all these pivots, and still moving up and out. I don't love leading diagonals and all that, but when we have a bunch of mess in here, and especially in crypto, these assets can just go and start ripping. And then we, as Elliotticians, we have to come back and figure out what's really going on back here. And that's why a lot of people think, diagonals are a lot more prevalent in crypto. It's basically because we have some junk PA that looks like this, and then all of a sudden we get a rip up, and we have to build off of that backwards, using that rip up as our anchor in wave 3, let's say, and then trying to figure out exactly what we came from. So I don't love diagonals. I've seen more fail than play out in real time. But again, looking at possibilities, if we end up getting a rip up here or a correction holding 60K and a move up, this would be on the list of possibilities that I'm looking at. And again, using that cheat sheet again, what we're looking for in subwaves of a diagonal here, every single zigzag family is allowed in every single wave. So you could have an ABC here, a WXY here, you could have a triple zigzag here or a double zigzag. Same thing for any of these waves. And that would allow us to have all this corrective nonsense in the subwaves and still be in some kind of a motive wave. So again, this is just one more consideration on the bullish side that I've popped out to me. Do I think it's the most likely? No, but if we end up getting something nice and corrective down and we start moving up, this is going to be moving higher and higher in the list of possibilities, closer to the probability. With that, let's go ahead and look at the bearish side. All right, out here on the bearish side, just looking at the larger picture from the all-time high here, possibility that we're dealing with some kind of corrective move in the form of a double zigzag, triple zigzag, what have you. So we have this move down here, and this is basically what I have my measurements off of for now. So if this is a double zigzag and this is the primary zigzag here, and we're dealing with the secondary here, again, this move is getting big compared to this one. So that's something to consider, but we're not out of the realm of possibility. this is something bigger like an A, B, C, and this is just a secondary, the subwave, that would make some sense. We typically want to see a retracement a little bit deeper than we are right now. If this is a double zigzag, typically we're looking for the 382 to the 50. But right now, I think this is the more conservative bullish side of things, that we're coming to an end here in the correction, and then we're looking for a possible bounce. So right now, I think as we move up, our projections move up with it. So we're getting farther and farther away from zero, essentially. So by moving this up here, the further we drift up, the higher our projections come up here. And as you can see, we're still in the 50 area as a ideal, most likely target for a double zigzag. This being the primary wave, WX, and then the Y coming down to here would put us into this area. And then if we do the internal Y here, A, B, C, 618 is a point, the most likely target. It's one of the targets for a zigzag, with the 1-to-1 being down here at about 40K. So right now, if we'd end up breaking 60K, 50K is on the list, 40K is on the list, which correspond with some nice round numbers as well, if this is some kind of double zigzag. We go further down or zoom in a little bit here, I think the counts are pretty much the same as the bullish side, with the exception, of course, since we're on the bear side, we're looking for a break of the 60K level in at least the form of a sweep here. And that would be the only difference. Again, if this is a diagonal, this would have to be some kind of motive wave here, and then we're looking for a move down. But in any case, I think unless we get a blast up, I think both the bull and the bear have this area to consider for a possible turn. And that's what I'm going to be watching for the next week. And we're coming into a new month. As you can see back here, this bounce pretty much started April 1st, and we haven't looked back since. The month coming to an end and all that, I think it's an interesting and correlative asset that we can look at, and looking for a possible turn here, at least for the lesser degree, if not for the full retrace. When we look at the correlated assets, the dollar and the ES, we'll look a little bit deeper into where we think they are and how that kind of all fits in. But unless we get a break up here, I think we're both looking for some kind of resolution to this pattern at some point. And I'm not going to sit here and keep calling tops and keep saying I'm convinced that it's this count this week or it's this count this day, and then get blown away and then have to recount everything and be confident about that count that gets blown up. I'm really waiting for two things to happen here. One is that we get a rip up and the kind of a wave 3 that we can all agree on. And that would be our anchor that we would use for the bullish side. And then we'd have to backward engineer what's really going on down here. Or I'm looking for a break of one of these higher lows to give us a clue that the trend is tired out, and then we're looking for a potential of a directional change. So in the form of a motive wave down, as always, breaking some of this structure here, and then a corrective internal to this impulsive move before we get a continuation. So those are the two concrete things that we're looking for here as far as structure breaks go. But I think depending on how this finishes up here, there's a lot of kind of convergence and confluence up here that this could be a spot for a turn. And then if we do end up breaking down, of course, we'll be using our levels of interest that we've been watching. I don't have this exact yet, but we'll be watching for this level that played as support in the past, play as potential resistance in the future. So if we end up coming down and breaking down again, watching for these two levels to play as resistance, as correlation or confluence, and looking for a move to the downside at some degree. So one last thing before we move on to the correlated assets is we're looking for a change in pattern, essentially, as we always are, where we've been finding resistance, breaking above resistance, and finding support above that resistance and flipping it into support. When we get a change in the delivery here of the PA, we're looking for that break of previous support and then turning that into resistance before getting the move down. And that's the basics of what we're looking for here. All right, real quick here on the correlated assets. Again, I think my main kind of thesis is if ES is happy and the DXY is dropping, Bitcoin's going to keep reluctantly getting dragged to the upside potentially. Again, it's not a one-to-one correlation by any means. As you can see, we're not at all-time high on Bitcoin, and we're at ripping all new all-time highs every other day here on ES. So I think the more and the higher the ES goes and NASDAQ and all the normal stocks keep ripping up, it's going to pull Bitcoin up and eventually Bitcoin's going to want to catch up, and all the money is going to start trickling down into the more risk-on assets. So that's the basic thesis. Hasn't played out yet where we get the rip up and BTC starts catching up. Every time BTC makes a new all-time high, ES is right there at the all-time high as well. So having ES at the all-time high is definitely a good tailwind. And then we're looking at the DXY to possibly drop a little bit lower, which would be a nice tailwind as well. DXY moving to the upside is more of a headwind. Again, it's not 100% correlation, but typically when DXY is dropping, all the other assets are going up at the same time. And that seems to have been the case since April 1st here. Dollar's been dropping all month. ESY has been climbing all month. I don't think that's a coincidence. Same thing with Bitcoin. So just real quick, we'll take a look at each of these. DXY, last week I was calling for ABC here. I still think that's possible. In Elliott Wave, though, ABC can equate a 1, 2, 3. It all depends on when we see a pattern complete. So either a wave 4 to the 5 without crossing over the wave 1 pivot here would make us lean either complete an impulse or doing some kind of WXY in a double zigzag. So both of those cases are still possible here. Was this a ABC down, zigzag X, and then we're moving down for an internal correction deeper within this impulsive range? That's possible. Or is it going to be an impulsive move down here? We sweep this level of interest that we've been keeping an eye on for the last couple of weeks, and then we get a retracement back above it, either to all-time highs, short-term pivot high here, or is it going to be some kind of internal retracement back to this level before we get a move down to lower lows possibly, or lower within the impulsive range here? This bounce up doesn't look like the most powerful. Again, with the news and all this kind of narrative stuff going on, we could send this 5 different ways until the market corrects and goes the way it was intended or wants to go. But in any case, I think this bounce here looks pretty weak. We're at the 50, which is the most likely target for a wave 4, and we've been going up within a channel here. We haven't seen a super powerful move, letting us know that the trend in the market wants to go in this direction per se. So I think there's still a possibility we're putting away 4 or 5 here, or a double zigzag to go deeper within this impulsive range, if not the all-time low. So this week's going to be clutch to see if we end up moving down. And if we do end up moving down, will that send ES up still in Bitcoin? And that's what I'm looking for here as far as direction goes. DXY down, everything else up. So that's the DXY. Let's look at the ES real quick. ES has been following our path or our count pretty decently here. We didn't get a deep of a retracement as I'd like to see, but we've been holding above the all-time high here and correcting above it, which is pretty huge and definitely shows some strength. But I tend to lean more on the conservative side. That being, this is a 1, 2. We've got a third wave here. 1, 2, 3, 4. 5 extension in the 5th, and then we have a 4 here. We got some good alternation to help us lean on that. So with that, we would be looking for a wave 5 here. Now the most likely target, just based off of 1-to-1, which is more typical in the stocks, we would be looking for another move up to 74, and that would be a 1-to-1 just based off the one back here. So if we end up moving up, 74 would be a target. But for wave 5s, all that typically happens, there's truncations and stuff, but what typically happens for wave 5, all we really need to do is just sweep the high of the wave 3, and then anything from there is a bonus. So we'll see what happens at the futures open tonight and stocks open tomorrow. We'll see if we get the same kind of pattern that we've been getting, where we get a gap down or Sunday when the futures open, and then by Monday morning the gap closes up and we get some continuation to the upside. So that's what I'm looking for here. ES was definitely an interesting asset to watch last week. Again, we got the gap down that we were kind of looking for last week, and then it got filled in a corrective fashion, I'd say. Dump on news, and then we do the same thing every day. We would climb reluctantly up on this trend line here for the day, and then we would dump sometime during the day, and then climb back up, dump on news, climb back up. And basically what we were doing is putting in equal here, sweeping those equal highs here, sweeping the equal highs. So this could still be going on. This might not be 100% complete here, and the price action doesn't scream impulse at the moment. So either we're going to be ripping up next week into May, which is near the end of the week, or we're just sitting here sweeping liquidity up and down until it's satisfied and ready to make the move in whichever direction it chooses. I think futures open is going to be huge to see if we're going to get some continuation up. Are we going to change this level of resistance into support and get a continuation up for the wave 5 print, or is this just sweeping? So these would be the two levels to keep an eye on for now. We've already held above that and found support at the very tiniest degree, but we have the same kind of thing here where we have previous resistance, we got to break up, and then we found support at the larger degree even, which is huge, and which is what we want to see on Bitcoin. You know, we got a little test here, but is it going to continue to hold as support? And when these levels break, we're going to be looking for a return or either a sharp move away from these levels or a move above and then correction to or a hold above and then continuation to that upside. So these are the two main levels I'm going to be watching on the ES for now. Again, I think we have some solid evidence here that these are going to be the key. That's it on ES. So zooming back out again, as far as correlation goes, I think we have a 4 in. We have more sideways, which will potentially bring Bitcoin up, but it all depends exactly what's going on. Again, if we say BTC has been holding up pretty good while this has been going sideways. BTC has reacted more positively than going sideways and dropping down. But again, we're not getting the scale of move where we are seeing what we're seeing in the ES here. We are building some trend line liquidity here. So I'm watching for a break potential on the BTC. Liquidity sweeps happen at highs, lows. It can happen at trend lines. So it could just be one of those things where we get a little break and sweep some liquidity here and then keep continuing up. I think everyone that's long is hiding and moving up behind these pivots, as I am, waiting for the bottom to fall out. And most likely what's going to happen, if we do end up breaking this with some force, we're going to end up sweeping all this liquidity. And if this is out the bearish side, we're going to end up moving down pretty quick here, as this kind of pattern typically plays out. But that's just what I'm seeing for now. As always, I'm just rolling with the waves as they print. If you have a different take or see something different, drop a comment down below. I read everything. Enjoy this kind of Elliott Wave breakdown or technical analysis breakdown, make sure to give me a follow and also go follow me over on X. I'm a lot more active there, to be honest. If you actually want to learn how to do some market analysis or dig deeper down and build a better base of technical analysis knowledge here during the bear market so you're prepped for the next bull market, which is what I luckily did in the 2017, 2018 bear market, I would definitely recommend coming and checking out TradeDevils.com here and checking out the belt system. We have a free starter kind of belt course. It's got a couple videos in here. It's free. You can come check it out, see if you enjoy the delivery and the information that we provide here. And then if you'd like to, you can always still continue on to the further belt systems and add on to your knowledge as you go. We also do have a Discord you can come check out as well, and you get those free Elliott Wave cheat sheets that I showed here. So that's definitely worth it by itself. I still look at that every day. But that's all I got for today. Thanks for watching. Trade safe, trade clarity. Take it easy. Later.